Hi traders, this is Bernard coming to you from Binary Winners Club. This is the video I did promise you a few days ago about objective trade setups, and I want to make it brief and to the point so that you can all benefit from what I have to offer. In our Telegram group, you can check the link down here. I did mention that there are certain setups you can take that are completely objective, where there is minimal guesswork or ambiguity, and those are the ones I'm focusing on. Trade setups that can repeat over time, and you will get consistent results when you use the same algorithm. So I'm revealing to you the algorithm for objective trade setups, and later on I'll be able to reveal to you some of my systems that I use to generate objective trade signals for my own trading. And those interested, of course, you can contact me after the video, at the end of this video, of course, later on, to also see whether you can secure your own copy and use it for your own trading. I do also offer a complete price action course mingled with volume analysis techniques for binary options, as well as another mentorship program purely for teaching you our powerful trading strategies. So you can enroll for the strategies course or for the price action course to learn some of these things. And now I want to introduce another one that is for objective trading. Objective trading will be another mentorship program where I emphasize on teaching you the 4 concepts you see here: trend analysis, level analysis, signal, and confirmation. Now, from my experience, I've noticed 2 things that are very powerful on any chart. They are a strong level. It's important I do mention this. A strong level, this is very important on any chart, as well as a strong trend. And after analyzing how these things interact, these 2 forces, I came to realize that a strong level may stop or halt market movement. A strong trend may break a level, but a trade taken at a key level in the direction of a strong trend is highly likely to be successful. So make sure you understand that the 2 interplay very well. A strong level, this could be support and resistance or a trend line or anything like that, combined with a strong trend will give you an edge in the market. And so how you combine these 2 is what I want to focus on, and how you pick signals from here. So besides that quote, you can quote me if you're going to refer to that. And indeed, I mean it, that if you have a strong level and a strong trend, you're likely to have a good trade. Now, I need to mention this equally, that there is no right way of trading, there is no wrong way of trading. There is no right technique, no wrong technique, as long as you remain profitable. As long as you remain profitable. I see people struggle, complaining, I've tried this technique of trading, it's not working for me, but I see others, it's working for them. I'm here to tell you that it is not important which technique you're using. What is important is you're making money. If you're going to use indicators to make money, so be it. At the end of it, you want an account that's profitable. If you're going to use pure price action, proceed and do it. As long as you're profitable, no problem. If you're going to use volume analysis, no problem. Succeed with that. But don't waste a lot of time saying this technique doesn't work or this one is superior. No. As long as you're making money, there's nothing like superiority or inferiority of a trading technique. And also remember, trader personality, or psychology is very important. I can give you my strategy and it will let you down. You can give me yours and maybe I'll fail with it or succeed with it. So there is personality in it. So without so much time taken into this, let's proceed and look at the 4 things. I want to make them 5. Indeed, there are 5. The 4 things that are critical. Number one is always follow the trend. Always follow market trend. In the next slide, I'm going to show you what kind of trends we have in the market and why you should follow the trend. Is simple. The trend will give you power to continue moving in the same direction the market is moving. Don't try to move the market the opposite way. Follow the direction of the market. Number 2, only enter trades at key levels. Key levels are support and resistance, trend lines, Fibonacci's, round numbers, moving averages, etc. Or even pivot point numbers or levels, right? So always enter your trades at those levels. So point number 1, point number 2. Point number 3, you need to have a signal. You need to have something that signals that now be ready to pull the trigger. This signal could be in the form of a candlestick pattern, a chart pattern, divergence, or some volume, etc. So, but you need to have a signal. That is item number 3 in my algorithm. Item number 4, confirmation. So you have a trend, you have a level, you have a signal. You need something that tells you now enter the market. Now place a trade. That's confirmation. Now, for those who want super high probability ways of trading, you need some other confluences. After this 4 have occurred, you need to also check whether there was a pullback, a breakout, volume, divergence, etc. These are things that will give you additional weight into your signal. Okay? So, let's move on and look at each of the 4 items and its role in our trading algorithm. Okay? And please remember, even before we move ahead, if you are not a member of Binary Winners Club, search for Binary Winners Club on YouTube, stay subscribed. Search for Binary Winners Club on Facebook, you'll find us there, join us. And search for Binary Winners Club on Telegram and join us. The link is down here. Great, so we move into trend analysis. So let's look at trend analysis. If you look at what we have here, if we look at what we have on our chart, this is a demonstration, such a graphic to show you the 3 types of trends we have in our market. An uptrend on the left here is where the market keeps on moving up, goes up, makes a high, makes a low, makes a higher high, makes a higher low, makes a higher high, and makes a higher low in that order. So it keeps on making higher highs and higher lows. So this is a higher high, okay? This a higher low, a higher high, a higher low. So when a market does that, it is considered to be an uptrend, okay? Now, we want to look at the opposite of an uptrend is what we call a downtrend. Now, a downtrend here is when you see, you are reading a chart and you see the market moving down, making a lower low, moving back up, making a higher low. So, sorry, a lower high, goes further down to make another lower low, goes up a little bit and makes a lower high in that order, lower low, lower high. So the market is moving in that direction. So if you see it making lower highs, right, those points, and lower lows, that is a downtrending market. It's a market dominated by selling pressure. An uptrend is a market dominated by buying pressure. Okay. Now the beautiful thing with this, and from my own experience, it is possible to analyze the trend automatically using some indicators. Okay, so you don't have to struggle so much. I need to spend the shortest amount of time on my chart to recognize the trend and start trading. So you can automate this, and indeed in some of the systems I'm going to share with you, or maybe license to you, these systems will have automatic trend identification. Now, a sideways market is one where the market is oscillating between 2 levels. It's making the same highs, identical highs, and making identical lows. So you can say the market's neither going down nor going up. It's just oscillating around the same highs and lows. This is a ranging market, also known as a sideways market. So a market can only exist in any of these 3 states: uptrending, sideways, or downtrending. And each of these, when we are in an uptrend or a downtrend, there's a different technique you use, which is trend following. But when a market sideways, you need to have a ranging strategy. Okay, so remember, trend is very important. We can automate trend identification, and I do that in my trading systems, so you don't have to worry about it. And always start with the trend and then look for the next item in our algorithm. In the next slide, I'll show you how to deal with this trend identification on a real chart. Okay, so let's move on. Now on this chart, okay, on this chart, you can see the market was moving up. This is an uptrend. This is an uptrend. Why do I consider it an uptrend? The market's trying to go up. It's trying to come slightly down, further up, further down, further up, down, up, down, up, in that order. So you see it making highs, higher highs. The highs are increasingly going up. The lows are also increasingly going up. So we say, you know, these are higher lows, higher highs. So in a downtrend scenario on the right here, you see if the market started from somewhere here, it had this low, okay, and it had this high. So we start from here. It makes a lower low. This low is lower than this. Makes a lower high. Okay, this high is lower than this. Makes another lower low and a lower high in that order. So you can consider that market as a downtrending market. Now, a ranging market in the middle here, we have drawn a box, a rectangle here. You see the market has a resistance here, has a support here, and it keeps on going back to the same levels. Same highs, same tops, and same bottoms. So it keeps on doing the same thing. Okay, so the same top about 4 times, the same bottom around 3 times. So that's a ranging market. Okay, so you need to be able to identify this using price action like I've shown you, or you can identify this with the help of automation. Like I've already indicated, my trading systems automatically will help you detect an uptrend, a downtrend, and a ranging market, or at least an uptrend and a downtrend, or a range, depending on what you're looking for. So next is we want to look at levels. In our algorithm, after analyzing the trend, you need to look at levels. The levels, these are, you know, price levels or price areas on your chart where market has a probability of reversing. Okay, a level that is above price, so if price is moving from below, going up to that level, and that level pushes the market down, that level is considered resistance. It's resisting price moving higher. Okay, so resistance are those areas, price areas or price levels on the chart where market reverses and starts going down. Okay, support are price levels or price areas on your chart where when market comes down to those levels, they move the market back up. So support areas are also considered demand areas in a way, in that we have a lot of buying pressure here that then pushes the market back up. Whereas on resistance, we have a lot of selling pressure here, or a lot of supply that pushes the market down. So the market always moves in a zigzag form, moving up because of buying pressure, moving down because of selling pressure, increasing higher buying pressure, increasing selling pressure, so a little bit of that. So you see the market oscillating like that. Now do remember, what was initially resistance, when broken like in our scenario here, becomes potential support. If it was resistance, there were a lot of sellers, or there was a lot of selling pressure here. When this selling pressure is diminished, it becomes buying pressure, because now buyers will adjust their entry point to this level. So we'll have this level as support. Similarly, when the market is moving down, if it breaks your support level to the downside and comes back to this level, what was initially a support area will become a resistance area, and that's the potential pushing the market down, because whatever was here as a demand, once exhausted, the sellers will move from the upper area to the lower area, and now selling pressure will be here, or supply pressure will be here, and that will see the market move down. Now do remember also, these levels can be identified automatically. It's okay if you are able to draw this on your own, but sometimes people struggle to draw these things. And if I give you a chart, 10 of you, I ask you to draw support and resistance, I can bet I'll get very different lines or different areas drawn on the chart. And that's very subjective. So in my trading approach and in the trading systems I'm going to unveil, these levels will be the same for every chart you open. That is, if all of you open Euro USD chart, same time frame, you'll see the same levels drawn for you and the same trend identified on the same chart. So there will be a template for that. So automation is possible here for those who want. Okay. So we move on from here and look at our chart and some of the levels I identified on this chart for demonstration purposes. So that is the chart. Now if you look at our chart here, let's see what we got. We have a market that is moving up and moving down. But when I talk about resistance levels, I say these are levels that prevent the chart or the price from going up. Market was moving up, could not proceed above that level, it had to go down. So that becomes resistance. Okay. Down here, we have a support area. Market was moving down, could not break that level. It went up, tried again, and went back up, and tried again, and went back up so many times. So this is a support level or a support area. I call it a level, but it's actually a range. It's actually a range, it's a zone, because it's not a specific line on the chart, but rather an area where you find buying pressure for support or you find selling pressure for resistance. So you just need to identify these levels on the chart, and like I've said, for my templates, these levels are drawn automatically. You don't have to worry about it. So if you join my mentorship program, I'll give you a template that has all of these things done for you. All you need to do is master how to trade at these levels, and I'm going to show you how to do that. All right. So we move on to next. We want to look at step number 3 in our algorithm, which is the patterns, or the patterns we want to look at. Okay, the signal itself. So here we are looking at various types of patterns, and I need to mention this in advance, that while I'm talking about patterns, don't believe they are just candlestick patterns only. There are many types of patterns you can use for signals. They could be candlestick patterns, like you are seeing here. We have a bullish engulfing, which works very well at support. Bearish engulfing works well at resistance. This bearish harami at resistance. Dark cloud cover at resistance. Rising sun at support. There are many others: morning star, evening star, pin bars, or they're called hammers, dojis, and spinning candles, etc. Besides these patterns, which you need to find at support and resistance, which is what we are talking about as levels, you need also to consider chart patterns like double tops and double bottoms, triple tops and triple bottoms, head and shoulders pattern and inverse head and shoulder pattern, triangles, wedges, etc. Those are patterns. Even divergences. Divergences at key levels can give you very good signals. Okay, so you need to be aware of this, and these things can be automated too. I've in fact automated a number of these, and a few people have also created indicators that can automatically identify for you specific candlestick patterns, so you don't have to remember the properties of this. If you are on MT4, for example, or MT5, you'll get an alert whenever a pattern forms, right? So this can be automated, and I've automated this also in many cases. So we move on and try to see whether we can identify some of these things, on the chart. Here we go. So we got several just done arrows from a random chart, and this is an example. If you consider 1, 2, 3, these 3 candles, these 3 candles could potentially give you what people would call, So do we call this one? This is called a morning star. Okay, these 3 patterns, these 3 candles. And maybe 1 and 2, this could be a bullish outside bar, okay? Another bullish outside bar here. In Forex, this could be called bullish engulfing and bullish engulfing, all right? So here we have a case of dark cloud cover, right? And 1, 2, 3 candles, which are strong. If they're especially strong, the middle candle is slightly small. If it's slightly bigger than that, this then could be called 3 white soldiers, for bullish move. These 2 could be bearish engulfing. But these 3, okay, these 3 candles could be evening star. So this bearish engulfing, these are inverted hammer. This could be morning star. So depending, you can take 1 candle alone, you can take 2 candles, you can take 3 candles. Now do remember, technically speaking, just 1 candle is called a formation, a candlestick formation. When you have a single candlestick, like a pin bar, like this is technically called a candlestick formation. When you have 2 or more, like in the evening star scenario, then we call this a candlestick pattern. It's good to be technical enough. Doesn't matter really, but it's important to know. So we have candlestick formations for single candles like pin bars and dojis and the spinning candles. But when we have a combination of 2 or more, we call them patterns, right? So again, you need to realize that even from what I've drawn, you cannot trade this candlestick formations and patterns alone. You will lose your account, definitely. You are going to lose. Reason being, these patterns alone and these formations alone will not succeed. Like now, you saw this morning stand, you thought you could go up, you might lose this one. You saw this outside bar, you might win here. You saw this dark cloud cover, you will lose here. If you are trading one candle expiry, you saw 1, 2, 3 and said, okay, three white soldiers, you would lose. You saw the evening star, you would win. You would win this one, you would lose this one, you would win this one, you would, you know, it's crazy. You will just lose and win, lose and win. You'd win here, you'd lose here, you'd win here. So random loss, random win. Okay, around, you know, from my own experience, around 45 to 55% roughly. That's how candlestick patterns can work for you. That's the best accuracy you can achieve. Whether you trade morning stars and you trade the next candle, the next 2, 3 candles, or engulfing or pin bars, you will get your accuracy around here. And so you cannot trade patterns alone. You will not be profitable. So you need to take these patterns at those levels in the direction of the trend. Algorithm number 3. That is step number 3 in the algorithm. Number 4, the fourth item that I consider for objective setups would be the signal itself. Okay, so remember, we started with number 1, we started with trend. So you can either trade in an uptrend or a downtrend or a ranging market. Number 2, we looked at levels, support and resistance, trend lines, etc. Number 3, we looked at patterns or signals. These patterns are like the candlestick patterns, chart patterns, etc. And then now we are looking at step number 4. You need to confirm your signal. Okay. So how do we confirm signals? It depends on the trading strategy. Okay. Some cases, there is a way you can trade an engulfing pattern at resistance or support directly without further confirmation, if it forms with certain characteristics, for example. So that could be a confirmation. For example, if you have a bullish engulfing at support, where the bullish engulfing pattern is also a tweezer bottom, there is a very high chance the next candle will just proceed upward. So you might confirm that way. You might also confirm your signals using chart patterns. Like, you are seeing a bullish engulfing at support level, but you are also seeing at that support level there was a chart pattern there, okay, like a double bottom. So there's a high chance that the market now start going up. Others would confirm their signals if they are taking a trade at a pullback level or retracement level, right? If they saw a pullback and at the pullback to a key level they saw like a candlestick pattern, then that would be a confirmation for them to enter. Others would only wait for a breakout for them to confirm the signal. Like now, you have a bullish engulfing pattern here, right? And you're waiting for the next candle to break the highs of the 2 candles. As it breaks, then you can continue going up, all right? Because it means now buyers have strength to continue moving up. So others might do that. Others would use volume, okay? Under volume, you could consider increasing volume, which means the market is likely to continue with momentum, or decreasing volume, meaning the market is weak in that direction. Here, you could also consider like anomaly, when price and volume disagree, or you can consider validation when price and volume agree, right? Then you can also consider momentum, okay? You can consider momentum in the direction of the trend. If you see at least 3 candles in the same direction, maybe bullish or bearish, and then you get a signal around here, right? Then from here you can consider that there was previous momentum, so the signal is likely to work. And then you can also consider more divergence. Divergence at key levels could be useful, whether it's hidden. Hidden divergence usually supports trend following techniques, and the classical divergence usually supports reversal techniques. And of course, price rejections. So you have like your bullish engulfing pattern here formed. You wait for a candle to come and reject this level or reject the support itself, and then you would consider taking a trade. There are many other ways of confirming your signals. Others would go for confirmation in lower time frames, like if you are trading on a 1 minute chart, you can go to 5 seconds or 15 seconds to confirm by seeing a color, a candle in the direction you expected, and then you place a trade. So indeed, there are many ways of confirming your signals, and it's important to confirm your signals before you place a trade. So, recap. 4 key things I did mention that would make you a profitable trader. Number 1, always follow the trend. If the trend is up, only buy. If the trend is down, only sell or go for lower options. If the trend is ranging, you can sell at resistance, buy at support, okay, with some confirmation. Now, number 2, while you are following the trend, only trade at levels, key levels. Key levels. You should watch one of my videos called TLS, the bare minimums for trading. Trend, level, and signal. Alright? So I've added 2 more things for you to consider. So levels could be support and resistance, trend lines, Fibonacci's, and the rest. Number 3, always look for a signal. The signal could come in the form of a pattern. Now this pattern could be candlestick, could be chart pattern, etc. Apart from the pattern, look for confirmation. I've given you examples of confirmation. They are right on this page. You can read. And finally, there are those other confluences I mentioned. Confluences. Confluences would include things like volume. All right? They could include volume. They're here. They could be extra confirmations. So maybe you had a candlestick confirmation, but you also saw volume. All right? Maybe you saw divergence. So the more of these things align in favor of your trade, the higher the probability of that trade working well for you or becoming successful. So this aspect may be automated or may not be automated. For example, rejections can be very difficult to automate because you need to quickly react. But things like momentum can be automated, volume can be automated, breakouts can be automated, etc. Overall, it's good to have objective setups. Objective setups would minimize confusion, would minimize ambiguity, or where you are doubting, and as you are doubting, market moves very fast and leaving you behind. So, this video is just an intro to what you're yet to be going through at Binary Winners Club. So please make sure you wait for more such kind of videos, but also be launching systems that I expect to help members in our year 2021 to stay profitable or become profitable if you have been losing to your brokers. Now, in case you are not subscribed, or to Binary Winners Club on Telegram or Facebook or YouTube, stay subscribed for more updates. Okay? Meanwhile, the link to our Telegram is here, right? And the link to our YouTube channel is right where you are watching this video from. So just click subscribe and hit that notification bell so that you're updated on matters to do with what we have launched for you to benefit. Free content, free and systems. We also have a sister group, Forex Winners Club for Forex trading. We offer courses. Join and enjoy with the rest of us. At the end of the day, LTE is our slogan, right? Learn, trade, earn. Learn, trade, then earn, right? So, bye for now and see you in the next video.